Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, guys. Today we will take a look at very sophisticated moment right now on stance on the Great British Pound. So you know that tomorrow will be an announcement of the Bank of England policy, and investors across the board expect the rate increase. Shortly speaking, in general, the reputation of the Bank of England in terms of the rate decisions and so on. So this is very unreliable authority. So as you know, previously we have traded a couple of times the rate change that hasn't happened, and we even have taken the short position in the moment where most investors expected the rate increase. This was happening in 2016. Also, as you know, the forecasting of such events as the elections. So we also have traded the election in the opposite direction in Great Britain. Recent elections. Bank of England very often change its mind. So it starts to talk about rate increases with the 2-3 sessions, but right at the key moment they do nothing, and this very often leads to a significant volatility. So what we have right now on Great British Pound, first of all, based on the Fathom Consulting analysis. So we usually use their analysis to understand the situation inside the United Kingdom. They tell that overall sentiment in the economy is fading, and this is they expect the drop in gross domestic product within the coming year, as the economical activity, especially in the construction. So that's why, in general, overall background on the economy right now around all this process, Brexit, stands not very good for economy, and it's difficult to explain the necessity of the rate increase by this moment. Yes, Great Britain right now has the necessary inflation around 3%, but most expectations right now stands that this inflation will start to decrease. This is the first moment why I really have some doubts on the possible rate increase tomorrow. Second, if you'll take a look at the commitment of traders report, guys, take a look that within the recent 4 weeks, net position has turned to bearish, and this is not just closing of the longs, but take a look at the open interest. Open interest rising. It means that here within the recent 4 weeks, investors have taken new shorts position on Great British Pound. This is a bit curious if you expect rate increase, right? So that all this stuff put the shadow on tomorrow's possible decision. From the technical point of view, now we are talking on sentiment analysis on some fundamental events. So from the technical point of view, what we have, indeed, market mostly has not quite erased, but even hasn't completed the setup that we have expected to see within the previous couple of weeks. Remember that after this leg has been formed, we have identified some bearish grabbers has been formed here, and here were bearish grabbers. Later, some minor grabbers have been also here, and they have suggested the market should drop further. So to form some kind of maybe butterfly, maybe something of that sort, and drop to the confidence support. But with the recent action, maybe based on an expectation of this rate increase, you can see that Great British Pound hasn't dropped. And mostly this setup has been cancelled. Although grabbers are still valid, the market hasn't erased it totally by the technical analysis. Because this top of this grabber is still valid, the market hasn't reached it. But overall price action, the market just doesn't show an action that you expect within the 3-4 sessions. It means that something is wrong. And this indeed has happened. So now trend has turned bullish here. Within the recent 2 sessions, we have tail closing, some fast acceleration up. And also market has erased this previous kind of the consolidation here. Market stands right now around monthly pivot point. This is November pivot. Market stands around it. So what else we see here? Take a look that market starting this upward bounce prior hitting on major support. It's 130 area. Major confidence support. Market hasn't quite reached it. It has stopped mostly on just 618 support from this most recent swing. So from this top to this bottom, 618 stands approximately around 30, 31 area. So it was 6 pips breakout, and the market holds above it. So what we could do in the current situation, if you would like to trade the Bank of England decision and you do not know how to take the position, what direction to take the position. So guys, in such circumstances, there are 2 major ways to act. First way is to take the small position, very small position with a far stop, very far. So when I have traded elections, I just place stop with the 100 pips or even greater, but have taken very small position. And you will get the money based on volatility. So because market is moving and will pass very significant range, very significant distance, even if you have minor position, you will get the acceptable result. Besides, if market will start to move in the opposite direction, you could close very fast your position, reverse your position with a very small loss, because you just have very small volume of the position. This is the first way how you could trying to possess yourself with the Bank of England decision. Second way is using stop entry orders. So sometimes I'm placing stop entry orders so on the breakout of some levels. For example, if market will break these lows, you could place the stop entry order with the downward action here. It's breakout of these lows. Market will accelerate further here because lots of stops probably stands here. So market will break it down. It will continue action to the downside. The same is true for this upward action. So you could place stop entry, for example, above the 618 resistance. Finally, you could use the classical approach, trying to take this position somewhere while the market is flirting slowly, expecting the Bank of England decision, and then just watch what will happen, trying to manage your position in the proper direction. So what we see right now on the chart, what patterns we could keep an eye on. On the 4-hour time frame chart, guys, we have also some bullish signs. So that being said, just make the bottom line on the daily chart. Mostly situation that we see here looks bullish in the short term, but we don't see the background of this bullishness. So whether this maybe this bullish action just due to closing of the shorts position before Bank of England decision. Market then later could turn down again as soon as the decision will be announced. So that's why on the 4-hour time frame chart we have some important moments. First of all, we have this triangle consolidation that recently with a few hours have been broken to the upside. This is important. It means that market probably will continue upward action for some time. And here we need to wait till the last moment where you could take the position. For that purpose, we will be watching for this AB equals CD action. The target of this action stands at daily resistance in 134. It's very close to the 34.15 major 618 resistance area. So if you would like to take the short position, you could wait for when this AB CD pattern will be completed and trying to take the position around 134 area. As I said, with the far stop, with a very small volume of the position. Because in this case, we could get currently triple to sell pattern. Maybe this leg actually could be a bit different. Maybe market will show great extension here, but the nature of the pattern still stands the same. That's situation that you could use if you have the bearish view and you want to play against the Bank of England decision. So that's set up for the bearish traders. For the bullish traders, guys, you could just trying to take the position somewhere with this rally. So on some minor retracement. Because you should position yourself before the decision will be made, and when it will be made, you will have no time to position yourself in the long position, because market will be first here and then it could just accelerate further to the upside. That's why you should think about taking position somewhere on this leg. This is if you would like to position before decision and using classical way to take the position. But you also could use, as I said, stop orders. For a stop placing orders, it's obviously it could be used breakout of the lows here if you have bearish view, but maybe if market will return back in this triangle consolidation, this also will be a sign of weakness, and this also could be used thinking about the taking short position, because when the market abandons the consolidation, it should not return it back down, and if this will happen, so probably will be signs of weakness. For the bullish entry with the stop order, you probably could use the breakout of this area and this ABCD patient, so market will accelerate further. Probably this will happen only on the positive decision from the Bank of England. This is the ways how you could possess yourself. Also, you could try just see if till the last moment get the announcement of the Bank of England decision and then trying to jump in the running train, but this will be more difficult, so you need some proper skills to do that. Well, but personally, guys, I really have some doubts that rate increase really will happen. So something tells me that it's really maybe will not happen again, because previously Bank of England have done it very often, and it has the reputation of crying for the wolves. So that's why I'm really not sure that we will get rate hike tomorrow.